Hello everyone, welcome to Lukmaan IAS. Today we are going to discuss about Indian economy in this series of previous year question analysis of UPSC prelims examination. So now let us quickly move and see the topics that we are going to understand for the day. Okay, so today we are going to learn about banking sector, then we will understand about food prices in India, then we will solve a question related to welfare scheme for farmers, then we will learn about consumer price index and wholesale price index, and we are going to understand about minimum support price. Okay, all these topics are relevant under this particular subheading of the syllabus that says economic and social development, sustainable development, poverty, inclusion, demographics, social sector initiatives, etc. Okay, so now let us take the first question for the day. This question says, what is the importance of the term interest coverage ratio of a farm in India? Okay, so we need to first understand what is interest coverage ratio. Okay, if we see interest coverage ratio, it is the ability of a farm to repay the interest on the borrowings that it has made already. Okay, so like a farm or a company might be having some kind of outstanding amount or outstanding debt, so along with the principal it has to pay some interest. So interest coverage ratio shows the ability of a farm to pay the interest. Okay, so now let us understand what are the importance of the interest coverage ratio. Okay, so let us read these statements one by one, and finally we have to find out which of these statements are correct. Okay, statement 1 says it helps in understanding the present risk of a farm that a bank is going to give loan to. Okay, so definitely, like if a farm is able to repay the principal and it is able to pay interest, it simply shows that that particular farm will be able to repay if a bank is going to give loan to that particular farm or a company. Okay, so this statement is correct because it helps in understanding the present risk of the farm that a bank is going to give loan to. Let us read the second statement. It says it helps in evaluating the emerging risk of a farm that a bank is going to give loan to. Okay, definitely if a particular farm has been able to repay the principal and it has been able to pay interest, then definitely this particular farm will be able to repay in near future also if some kind of risk emerges in the near future. Okay, so second statement is also correct. Okay, now let us read the third statement, which says the higher a borrowing farm's level of interest coverage ratio, the worse is its ability to service its debt. Okay, what do we mean by servicing of debt? Servicing of debt means payment of interest. Okay, so the thing is, if a particular farm has higher, okay, it has higher interest coverage ratio, okay, it simply shows that that particular farm will be able to manage the risk. Okay, it will be easier for the farm to service its debt, means like it will be easier for the farm to pay the interest. Okay, so that's why third statement is incorrect. So correct answer for this question is option A. Okay, and what is interest coverage ratio? Interest coverage ratio is the ratio of interest expense divided by EBIT. What is EBIT? EBIT stands for earning before interest and taxes. Okay, in your free time you can simply pause this video and read what is written over here. Okay, correct answer for this question is option A, and this question reflected in the year of 2020 prelims examination. Now let us take the next question. This says, which of the following factors or policies were affecting the price of rice in India in the recent past? Okay, so now they are asking like what are the factors, okay, that have affected the price of rice in India in the recent past. Okay, number one, it says minimum support price. Definitely minimum support price affects the price of rice in the market. Okay, how? Because government sets some MSP, minimum support price. So this is the price at which the government assures the farmers that it is going to purchase if the farmers are not able to sell their produce in the market. Okay, so the MSP has a tendency of increasing the price of rice. What it does, it increases the price of rice in the market, because like if people are not buying, okay, the rice at a price which is higher than MSP, in that case the farmers will be selling the rice to the government agents or government agencies at MSP. Okay, so definitely minimum support price affects the price of rice in the market. If we talk about the second statement, this says government's trading. Okay, how the government does trading? Government does auction. Okay, how government does auction? First of all, government procures, okay, the rice at minimum support price. It stockpiles, and after then whenever the price of rice in the market goes very high, then government intervenes, and it tries to moderate the price of rice in the market by trading the rice. Okay, how it trades? It gives auction, okay, through some of the agencies of the central government. So government's trading also affects the price of rice in the market. Okay, now let us take the third statement that says government's stockpiling. Definitely. Okay, so what does government do? Government procures the rice or other food grains at minimum support price. It stockpiles, means like it stores those food grains with itself, and whenever the price of rice in the market goes very high, the government does trading. Okay, so government's stockpiling also affects the price of rice in the market. Definitely. Okay, and consumer subsidies. You might be knowing that government runs fair price shops. Okay, fair price shops, and government gives ration or food grains like rice at a very cheaper cost, and this is highly subsidized. So this subsidized food grains also affects the price of rice in the market. So all these are correct answers. So correct answer for this question is option D. Okay, so in your free time you can read this particular slide. Okay, now let us take the next question. This question says, under the Kisan credit card scheme, short term credit support is given to farmers for which of the following purposes? Okay, so this statement talks about a government scheme which is known as Kisan credit card scheme. Okay, Kisan credit card scheme, and they are saying through Kisan credit card scheme the government gives short term credit. Okay, it gives short term, okay, credit support. Okay, credit support to farmers. So if government is giving short term credit support to farmers, definitely that money, that credit support will not be very high amount. It is going to be very low amount, so that like it just supports the farmers at in the time of distress. So what can be the purposes of these short term credit support? So now let us read these statements and let us try to find out what can be the purposes. One of the purpose can be working capital for maintenance of farm assets. Definitely, means working capital means a small amount is required so that farmers can actually maintain the farm assets, like whatever assets they require, they can maintain the farm assets. So one should be in the answer, and we can eliminate option C. Okay, now let us read the second statement. It says purchase of combined harvesters, tractors and mini truck. Okay, government does not give such a high amount to the farmers so that they can procure or they can purchase these capital assets. These are capital goods, capital assets. Okay, so this is just a short term credit support. Okay, so that's why statement second is incorrect. If it is incorrect, we can eliminate some options. We can eliminate option A, we can eliminate option D. So correct answer is option B. Okay, option B. We have already achieved the approached the correct answer. So like 1, 3 and 4 must be correct. Okay, let us read the third statement, which says consumption requirement of farm households. Definitely, if farmers are getting short term credit support, they can use it for consumption requirements for their household. Then they can also meet the post harvest expenses using the short term credit. But like if we talk about construction of family house and setting up a village cold storage facility, it requires a very huge amount and it is a capital good. Okay, so capital good, creation of capital good may not be possible with the Kisan credit card scheme. Okay, so correct answer for this question is option B. This question also reflected in the year of 2020. Now let us take the next question for the day. This question says, consider the following statements. Okay, the weightage of food in consumer price index is higher than that of wholesale price index. Okay, you might be knowing that we have on one hand we have consumer price index and we have wholesale price index. Okay, if we talk about weightage of food in consumer price index, it is around, okay, 48 to 50%. And if we talk about weightage of food in the wholesale price index, it is around 18%. So first statement is correct. First statement says that the weightage of food in consumer price index is higher than that of wholesale price index. This is correct. Okay, so if statement 1 is correct, we can eliminate some options. We can eliminate option B and option C. Now let us read the second statement. This says the wholesale price index does not capture the change in prices of services which CPI does. Definitely, okay. The consumer price index, what it does, it captures two things. It captures on the one hand, changes in price in goods as well as services, okay, as well as services. But if we talk about wholesale price index, it only captures the changes in the price in goods only at wholesale level. Okay, so this statement is also correct. 1 and 2 are correct. Okay, now let us read the third statement, which says Reserve Bank of India has now adopted wholesale price index as a key measure of inflation and to decide on changing the key policy rates. This statement is incorrect because in the year of 2014 the Reserve Bank of India has decided, okay, the Reserve Bank of India has decided that it will use only consumer price index, okay, as a key measure of inflation to decide on the changing key policy rates. And this particular action was taken by the Reserve Bank of India on the recommendation of Urijit Patel Committee, okay, on the recommendation of Urijit Patel Committee. Okay, so that's why third statement is incorrect. Correct answer for this question is option A. This question reflected in the year of 2020. Okay, it was not in 2019. It reflected in 2020. Correct answer is option A. Okay, in your free time you can just pause the video and you can read the differences between wholesale price index and consumer price index. Okay, wholesale price index is released by the Office of Economic Advisor under the Ministry of Commerce and Industry, and consumer price index is released by, okay, Central Statistical Organization under the Ministry of Statistics and Program Implementation, and other things I have already explained. Okay, now let us take the next question. This question says, consider the following statements. In the case of all cereals, pulses and oil seeds, the procurement at minimum support price is unlimited in any state or union territory in India. This statement is incorrect because, like, there is a guideline, okay, under PM Asha. Okay, so we have a government scheme which is known as PM Asha, and under this particular PM Asha guidelines, the limit to procurement of cereals, pulses and oil seeds at minimum support price is limited to 25% of total procurement. Okay, limited to 25% of total production. Okay, so that's why statement 1 is incorrect. And if we talk about the statement 2, it says in the case of cereals and pulses, the MSP is fixed in any state or UT at a level to which the market price will never rise. Okay, this statement is incorrect because the market price is decided by the market forces like demand and supply curves. Okay, so MSP does not decide the market price. MSP just gives an assurance to the farmers that whatever produce that they are producing, that will be purchased by the government if in case the farmers are not able to sell outside, or like if the farmers want to sell to the government, they can directly sell to the government. Okay, so the thing is the market price is not not fixed by the MSPs. Okay, so that's why statement 2 is also incorrect, and correct answer for this question is option D. Okay, option D is the correct answer. So this is the explanation over here. Okay, so that's all that I had to discuss with you for the day. Thank you so much everyone for attending today's session. I hope you have a great day ahead. Live online classes are as effective as offline classes. Ethics with S. Ansari remains the best ever choice. Do you know that ethics paper is the only paper in general studies that pays more with less efforts. One can easily secure 130 to 140 marks. Lukmaan IAS is a well-established name since 2014 for ethics paper. We offer 3 types of courses: Ethics Foundation course, Ethics Case Studies, and Ethics Test Series. Since 2015, Lukmaan IAS students have maintained the records of securing the highest marks in this paper. Ethics Foundation course is starting from 21st of June 2021. Classes will be for 4 days in a week from 11 am to 1:30 pm. The course duration is of 60 days and the videos will be available for 75 days. There will be 43 classes, of which 35 classes will be focused on theory and concept building and 8 classes will be dedicated for case studies. There will be over 180 case studies and 3 tests. Since 4 months are left for prelims, one can easily finish the ethics paper before prelims itself, and it's a good opportunity. So why to wait? Contact us today for more information.